Hey everyone, this is Dan and I want to ask you a question. Have you noticed what's been going on with Bitcoin lately? I mean, up, down, 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 up, and then down again. You see, Bitcoin is the best performing asset over the last decade, even longer. But it can also, for some people, be kind of emotionally exhausting. You see, there's three types of investors. You've got the buy Bitcoin and panic every time it drops. Then they get whipsawed up and down as they get back in and out. Others look to trade in cycles. They look at charts and graphs, and again, they jump in and out. And then there are those that sit on the sidelines because they're afraid of volatility, but they know there's something about Bitcoin that interests them. But what if there was another option? What if there was even a smarter, safer, more predictable way to acquire Bitcoin? One that doesn't drop in price with a lot of volatility, one that actually pays you Bitcoin yield every single month, and one that lets you self-custody your own Bitcoin. So even during market crashes, it's steady. Well, today I'm going to show you exactly how the Ysurance Z Token works and why it's different and why this may be the most innovative way to accumulate Bitcoin today and beyond without all the volatility. I'm also going to show you how we ultimately protect you, your family, your estate, and your legacy by coupling the safest asset in the world with the highest performing asset in the world. You see, we're actually changing the way people generate wealth and protect their assets, all while outperforming most other investment classes at the same time. So let's go. All right. So what is the safest asset in the world? Some of you probably know it's a well-designed, high cash value life insurance policy issued by an A+ rated company that's been around for over 100 years and never missed an obligation. This gives us the ultimate safety net. And by the way, some tax advantages too. It's the best protection you can have when it comes to passing on your legacy, passing on your estate, protecting your family. So what's the highest performing asset? You probably guessed, Bitcoin. Since 2013, it's up over 360,000%. Yes, I did not say that incorrectly. 360,000%, 70+% per year average return. And if you're following along some of the Bitcoin gurus, many think it's on its way to 1 million and even more. But it's not going to be a straight line, and it's not going to be without some bumps along the way, which what makes our strategy even better. It's a way to acquire Bitcoin at a discount, and I'm talking about a deep discount. And because our costs are so low, the volatility swings aren't really an issue. Let me show you how we do it and how you can join in with us. So I'll speak more specifically about the policy and how that works, the tax advantages, how to use leverage against it, all that stuff in another video. But just know that when we combine the horsepower of Bitcoin with the safety of a cash value life insurance policy, I mean, together they become a powerful wealth building machine for you and again, for your legacy. And with the policy, you have access to cash, you have tax advantages, and you have the ultimate safety net. So no matter what Bitcoin does, we know we have the backstop. Now, I wanted to do this video because we've seen some fluctuation in Bitcoin lately, and I wanted to address how we've overcome the volatility of Bitcoin. Okay, let's start with the problem. With traditional Bitcoin ownership, we've got people who treat Bitcoin more like a gamble. They buy it, they watch it, they refresh their phone 20 times a day, and then they sell it at the worst possible moment. Bitcoin dips 20%. They start to worry. Bitcoin dips 40%. They really panic and they sell. They swear they'll never do that again. The next cycle, they're going to hold on through it. Well, it's really not a wealth strategy to take that emotional roller coaster. Now, long-term holders, they're referred to as hodlers. It stands for hold on for dear life. HODLers, hodlers. These investors have done just fine. But here's the flaw in just holding on to Bitcoin. You don't get yield. You don't get cash flow. You don't reduce cost basis on dips. You don't reinvest strategically for compounding. So what they hope and pray for is that Bitcoin's just going to consistently go up. Now with Ysurance and the Z Token, there's finally a simple way to do it. Now with Ysurance, we get the best of both worlds. We get the Bitcoin yield and the life insurance protection. Yes, I know, very clever name, right? Well, let me explain the Z token that's part of this whole process. It's the simplest way It's the easiest way to get Bitcoin. In a nutshell, it's a Bitcoin mining token that pays monthly yield. So just real quick, mining is the term that's used that literally brings a new Bitcoin into existence. Mining is essentially the supercomputer network that's worldwide that verifies transaction and puts those transactions on what's called the blockchain. Think of it as a Visa, MasterCard. Every transaction is put on a ledger of sorts and is verified, and Visa gets paid a fee for that service. A mining operation gets paid in Bitcoin for providing proof of transactions. And a token represents the ownership of something, kind of like a share of stock. However, let me tell you what our token is not. Our Z token is not Bitcoin. The Z token is not mining equipment. The Z token is not a speculative coin. The Z token is not a stable coin by true definition, but it is pegged to stay at $1 per token. What the Z token does is it represents your share of the Bitcoin yield, and the yield is generated by our mining operations. Think of it like this. You're not buying the mining hardware. You're not leasing a machine. You're not paying the power bills. You're not maintaining the equipment. You're simply buying the yield from the mining ecosystem, if you will. It's stable. It's predictable. It's self-custodied. In other words, when you get that Bitcoin paid to you, you are the custodian, and it pays the Bitcoin rewards every single month. This actually gives you something that the buy and hold Bitcoin buyers can't give you. Bitcoin yield without the Bitcoin volatility. So if Bitcoin drops 20%, your Z token is still $1. If Bitcoin drops 40%, your Z token is still $1. If Bitcoin whipsaws up and down, your Z token price still stays $1. The only thing that might fluctuate very, very little is the yield. And often the yield can increase during dips. I'll explain that in just a second. Well, this is what makes the Z token so powerful. Mining rewards are based on some technical. I won't dive into that too deeply, but they're network difficulty, blockchain rewards, power costs, operational efficiency, not Bitcoin's trading price. So when Bitcoin's price drops, some miners actually shut off due to power costs. The difficulty adjusts downward, so there's less competition, so you get a higher share of the rewards for the efficient operations. What's that mean? When Bitcoin dips, the Z token yield could actually go up. And while the rest of the world panics, you're sitting back saying, hey, thanks for the extra Bitcoin this month. This is how you remove the emotional fear and replace it with mathematical confidence. Now, every investor wishes they could get yield on Bitcoin and keep custody of it. Investors would like to acquire more Bitcoin without the downside risk and not have to worry about timing the market. The Z token accomplishes this because, again, the price of the token doesn't fluctuate, always $1. The yield is paid in Bitcoin every month, so you're getting Bitcoin rewards that go into your self-custody wallet. You never lose control of your Bitcoin. This means there's no exchange risk. There's no counterparty risk on rewards. There's none of this, not your keys, not your coins, that everybody worries about. There's no fear of losing tokens in a crash. There's no margin calls. There's no liquidation risk. In fact, it even gets better. If you want to, you can take the Bitcoin you earn monthly and cash it in to buy more Z tokens and get that compounding effect. And this can be huge. It will once again protect you from future Bitcoin price drops, but it adds more yield every month to your compounding. Ultimately, compounding the token increases your ROI, return on investment. It decreases your risk. It's a win whatever Bitcoin does. The unique benefit that I need to stress is custody. You see, there are yield products. There are Bitcoin miners. There are staking platforms. There are DeFi strategies. But here's the big problem with all of them. They hold your coins in their custody, not you. And we've all seen what can happen when you don't have custody. FTX, Celsius, BlockFi, Voyager. That's just to name a few. All those bankruptcies and all the people's coins were frozen. So self-custody is really one of the most important principles of Bitcoin. And the Z token is the only mining yield token, the only price-pegged mining yield token, the only self-custody Bitcoin yielding token, and the only one paying in real Bitcoin every single month. No one else has solved this problem. That's why this is so huge. Your tokens stay in your wallet. Your Bitcoin rewards go to your wallet. You, not us, control your assets. This is the safest way to accumulate Bitcoin. It's really never been engineered. Okay, so I always get asked, what happens if Bitcoin crashes? Well, this is the heart of the strategy. If Bitcoin drops from 100,000 to 80,000, again, your Z token is still pegged at $1. If it drops to 40,000, still $1. It will always be $1. The worst that can happen is, again, the yield might fluctuate slightly, and your rewards can actually add more Bitcoin as those prices get lower. In other words, you get paid more Bitcoin at the perfect time, which is during dips. This is how wealthy investors think. You remove the risk, keep the upside, accumulate more during the fear cycles. Let's quickly talk about how reinvesting can maximize compounding. This is the part the wealthy investors really understand. You see, if you earn Bitcoin every month and you reinvest that yield back into new Z tokens, you're growing your Z token stack, which grows your yield. And you do that at the exact same time. Your rewards protect your downside. Your reinvestment increases your production. Your production increases your future reward. Simply put, if your tokens produce new Bitcoin this month and you turn that Bitcoin into more tokens, the next month your dividend will increase. And if you do that month after month, each time you compound, you increase your income and your rate of return. This is compounding in motion. It's the same principle of cash flow reinvestment, dividend reinvestment, business reinvestment, dollar cost averaging, but now applied to Bitcoin. This is how you build your wealth predictably and reduce your overall risk at the same time. Let's end with this very simple example. Let's say someone buys 10,000 Z tokens. Okay, they're $1 each, 10,000 tokens. Let's say the monthly yield is 3%. Remember, the yield could fluctuate somewhere probably between 2 and 4%. That means that month you would earn $300 worth of Bitcoin every month sent to your wallet, self-custody in Bitcoin, no token price fluctuation, no speculation, no fear. Well, over a year, that's $3,600 worth of Bitcoin, in addition to owning the original 10,000 Z tokens. If you were to reinvest and compound your monthly Bitcoin, you would actually have 13,600 tokens working for you every single month, producing that, in this example, 3% monthly. Do that for a few years and bam, it's kind of amazing. If Bitcoin goes up, great, that's what we expect it to do. And your rewards could rise in that value as well. If Bitcoin goes down, great, you're accumulating more Bitcoin at lower prices. If you've reinvested into the token, your token is still worth $1. Either way, you win. And finally, who is ideal for this strategy? Well, it's actually perfect for high income earners, business owners, professionals, family offices, long-term investors, anyone who wants Bitcoin but wants to remove some of the chaos. Anyone who wants to get Bitcoin but do it at less than half its trading price. People who value self-custody and people who want yield and safety on their Bitcoin. Now, who is this not very good for? It's not very good for day traders, speculators, people looking for a quick flip. This is a strategy, not a gamble. The big question I get asked is, why hasn't anyone done this before? Well, simple, because most miners don't have the efficiency. Most companies want to hold the coins, your Bitcoin, in their custody. Most platforms are centralized. Most tokens are volatile. Most people don't understand self-custody. Most institutions don't want to give investors the upside of the yield. It took years of work to solve. We had to solve the mining efficiency, the custody, the token structure, the compliance, the yield distribution, the wallet integration, and the client safety. That's exactly why Yields built the Z token. It's not by accident. We did it on purpose. That's why we built Ysurance. So when we couple the life policy with the Bitcoin, you'll need to see it for yourself to see what it can do. So what's the next step? Well, if you see even a little potential here, if you want a safer, more intelligent, more predictable way to accumulate Bitcoin without riding the roller coaster, without losing sleep, without chasing dips, without risking your coins on an exchange, then your next step is really simple. Schedule a strategy session with us. Let's build you a Ysurance plan the right way. We'll walk you through your objectives, your timeline, your risk comfort, and how the Z token fits your situation, how you can leverage your life policy for even greater returns, and how compounding yield can accelerate your long-term growth. People who use this strategy are removing fear, removing timing, removing guessing, and replacing it with math, yield, self-custody, and the use of a dollar token that never drops whenever Bitcoin drops. This is the future of intelligent Bitcoin accumulation. So let's build out your plan. Grab my calendar link, pick a time that works best for you, and let's see if this can make a financial difference for your wealth, for your legacy. Until next time, take care.